zone over here, we also have some sell side liquidity prices also taken out. So it's important to understand where the buy and sell side liquidity points are. So step number 2 is we're waiting for a mitigation into the zone itself. So that's step number 2. We want to be waiting for price to get into the zone itself. Okay. Now from here, we need to pay attention to the fair value gaps on the lower time frames. And this is essentially step 3 of the strategy. So we have a fair value gap over here. What we're looking for is essentially very simple. Now that we've had a tap of a higher time frame level, a 50-minute level, we're waiting for price to kind of break this zone, and then we want to be entering off the reaction of this zone. This is pretty much how the strategy itself unravels. But before we go into this, we should understand what's happening over here on the footprint charts. So the footprint charts will give you a much greater indication as to what is actually going on. So here on the footprint charts, we have the exact same price action you saw earlier, but we're now going to be dissecting what was going on at this particular level. And in order for us to do that, we need to understand what was going on within the candle itself. So this is the fair value gap, and this is the candle that rejected. So now that we have some numbers over here, it looks very complicated, but I'm going to break this down for traders very simply. You have two numbers, a bid and an ask. The left number is the bid, the right number is the ask, right? So in this case, we have a lot of red over here. The red represents the fact that there's more market participants hitting the bid than the ask. So this means that there's more aggressive sellers than there are aggressive buyers. What does this mean to us as a trader? As a trader, it means that we have a lot of aggressive sellers that are entering the zone very aggressively. They are looking to drive price lower. So if we just go back and look at the current price